Good morning, Tim Nyland. Date is July 22nd, and this is our weekly internal strategy call. We got the year-to-date June 2020 performance numbers for the Zacks ETF model portfolios, so we're going to review that today. And the numbers look really, really solid as they continue to do so. And I figured I would take this opportunity to walk through not only the model portfolios themselves, but talk about some of the development we have going on as far as bringing additional ETF model portfolio providers on board, and review the Zacks ETF rank alongside of that. So bear with me as we move through this. In Advisor Tools, you can find access to all of the ETF models and ETF coverage right under the Zacks Research menu. And what I want to do is I want to go in and talk just a little bit about the ETF coverage. Keep in mind that everything related to the ETF research itself is all analyst written. It's headed up by Nina Mishra, who does an excellent job at producing all of this written research for us. 516 companies currently under coverage, and obviously they can be filtered on here by issuer, by investment category, or anything else you want, including the rank itself. What I want to call everyone's attention to is this PDF document that you access by simply clicking on this green information icon. You'll see this throughout Advisor Tools. This is a newer document that Adam and the team put together, and I really like it. It does a really, really good job. Just specifically, if you don't read anything else, this top section is probably the best part. And what I want everybody to take away from this is that ETFs are literally the instruments that advisors utilize for asset allocation purposes. So think about that from more of a top-down perspective. When you speak in terms of asset allocation, you're not approaching things bottom-up, you're approaching things top-down. And the neat thing about the way that we produce the ETF research and the ETF rank at Zacks is that we actually start with the forecast for future asset class returns. And Adam has done a really nice job of outlining everything that we forecast. And this is obviously done very different than anybody else in the industry. So if not only are we polling the sell side, but we're also polling buy side CIOs. And if you want all the specifics on this, beneath market strategy, the monthly investing update and asset allocation piece is loaded with some tremendous information, not only related to the forecast for future asset class returns, but as I'll show you in just a minute, we've got the allocation recommendations and everything just laid out for the advisors. And what I wanted to call everyone's attention to is literally this paragraph in here. This is produced monthly by our chief equity strategist and economist, John Blank. And he talks specifically about how we produce these forecasts for all of these major asset classes. And again, I only mentioned one of the bullet points here. There's a lot of other things that go into it. It makes it a really, really tremendous document. What I want to do is I want to scroll down to, excuse me, I had to get rid of an alert, some of the more interesting points in here. And again, if you haven't had a chance to scroll through the document, I mean, it's tremendous. John does a really good job of bringing all the current events into play. This is just, as I'm panning through here, I see that I think this is the 84 or so global central banks that have actually enacted interest rate cuts or provided additional liquidity globally. Just a really, really good document. But when we get down into like page 38 to 40, and again, in speaking with Jeff Schreck this morning and Adam on the product team, we do have a table that's going to show all of this information in Advisor Tools that's in development. But this is basically a summary of the sector picks for the the S&P 500, and this is based on the polling work. So again, this is the top-down the forecast for these class returns. This is the polling work specifically for the S&P 500 sectors. And just to show you, it talks about each sector rose hugely from very attractive to very unattractive. So now we're talking about the rotation kind of taking hold. You can see Infotech fell from attractive to very attractive. So this is really, really good for advisors to kind of get an idea of sentiment from across not only the sell side, but also buy side CIOs, so other firms in their industry. And then we actually get into the Zacks Rank industry tables for the month of June. We call it the July because it's as of June 30th month end. And we actually break down each of the industries from very attractive to very unattractive. And obviously all of this can be referenced inside Advisor Tools. Probably one of the neatest features of this document is the actual asset allocation guidelines. We talk about the overweight, we talk about the actual percentage, Russell 2000, 400, large cap, mid cap, small cap, all that. So target allocation for assets, everything is presented in the documents, really, really nice and clear for advisors to utilize. And again, that's published monthly, and it's market strategy, monthly investing update, and asset allocation. So this all ties together, and I'm going to go back to this document here. It all ties together with how we produce the Zacks Rank. So the top-down forecast, we then lump in expense ratio, the actual ETF holdings. I'm going to get back to that in a minute. We look at some momentum factors, the yield itself, duration, this is important, how the actual instruments move relative to changes in interest rates, credit ratings, bid-ask ratio, things like that. And one of the most powerful pieces here is obviously the ETF holdings themselves. This is what really makes us unique, in that we are able to break these ETFs down into their constituent or their membership level. And at the actual equity level itself, we get to apply the award-winning Zacks Rank. And I'm going to basically bring up the InvestStars website. This is a website that all of our advisors have access to, if I can spell it right. And it's something that should be referenced. I mean, it's a really, really great resource. If you just click on ranks and move to ranks, I always like to start out looking at the fundamental strategy. This is going to be a lot of our competition on the sell side, including the bulge bracket firms. All ratings will get you, buys, neutrals, and sells. I like to personally go to the longest time frame that InvestStars manages, and it's 6 years, and we can keep it on all components. And you can see Argus in here, Morgan Stanley, Credit Suisse, Doty, but notice the percentage gain, 60% on the buy. If we switch this over to quantitative, we are obviously a quantitative strategy. Charlie and I already reported this morning. It looks as though they had something happen on their update. We are still number one. We were number one yesterday. The buy returns were like 105%. They're fixing this now, but Value Engine was also 2. But you can see that we're number one, and we crush all of the fundamental strategies, including the bulge bracket, by almost 2x. And so we get to actually utilize this award-winning Zacks Equity Rank, and we get to roll that up to the aggregate ETF level. And so it really makes our ETF research that much more powerful, kind of giving the munitions to Nina and her team to produce that wonderful written research that we have. So with that, we then take that into the ETF model portfolios themselves. And this is where we have some exciting development going on. Adam has been spearheading an effort to bring in other third parties as well. So we actually have the Wisdom Tree models available in Advisor Tools. And again, all I did was just go to Zacks research menu and hit the ETF model portfolios. And again, if this is something that if you're permissioned to in Advisor Tools, you will see it. If you're not permissioned to it, if for one of your clients, prospects, not permissioned to it, they'll need to talk to the salesperson about getting access to it. But what we have coming, which is super exciting, is that Adam is currently working on agreements with BlackRock, Invesco, and Vanguard. So this list is going to expand fairly nicely here in the near term. What I wanted to basically show everyone was that we have more of these information icons, and the changes to the model portfolios. The information is great. This is basically our marketing page in here, but there is some really good information. I'm not going to go through that on this call, but what I want to do is just talk about some of the benefits to the second document, and that's this little ETF model portfolio changes document. And what I like to look at in here is just the actual increase and decrease that was done to whatever holdings on the equity side. So it says in here, increase international. I'll make this a little bit bigger so everybody can read it. Develop large cap allocation, decrease international small cap. And so it really shows exactly what was done to each of the models, and it talks about why right in the middle. So we do the same thing for fixed incomes. We decreased U.S. investment grade corporate, increased short-term corporate, so getting a little bit shorter on duration. Why we did it here, and then the specific changes to the models here. So pay attention to that. It's really, really good. And then we also go through the core portfolio asset allocations, which is something that advisors really, really are looking for. So this is the conservative model. This is the moderate model. This is the aggressive model. And here's the allocations. Okay. Here's the income model. All right. And then the last thing I want to touch on is the new performance that that Nina was just able to provide, and Adam and Jeff got put in yesterday. And so portfolio performance, these are going to be full stats along with the actual portfolio risk metrics, if you will. So max drawdown, Sharpe ratio, again, return per unit of risk. This is really nice returns. I mean, when you look at these returns, year to date, specifically 2020, right on par with the S&P 500, maybe a little bit better in some cases. But at any rate, really nice to see this. The models are working really well. And I don't know if there's any questions anybody has here, but models look really good. Okay, that's all I had for today. So if there are no questions, I'll go ahead and end the call. Thank you, everyone.